Hello, everyone. Welcome to the Selling My Business podcast. This is your host, August. Today, my guest is John Naayers. John is an attorney who, throughout his career, has specialized in business and real estate matters. John is also the founder and president of Business Network of Ohio, a professional business and real estate broker firm that recently celebrated its 25th anniversary brokering the sale of businesses and related real estate throughout the state of Ohio and Southeast Michigan. John is unique in that he is a licensed attorney who has been involved in hundreds of business and real estate transactions as an attorney, plus a licensed real estate broker and certified business broker who has brokered the sale of well over 100 businesses. BNO has offices in Toledo, Dayton, and Columbus, and concentrates on brokering the sale of businesses in the $500K to $10 million sales price range in a variety of different industries. So, John, tell me a little bit more about your background. What made you become a business broker?
My background, like you said, I'm an attorney that throughout my career has primarily been a transactional attorney in business transactions and real estate transactions, and then ultimately became a business broker and then also a real estate broker, because when I sold the businesses, I realized often you're selling the real estate along with it. So we do handle the commercial real estate. To answer your question, why I delved into and became a business broker, I guess as a business attorney, I sort of saw the good and the bad and the ugly of the brokers that were out there. And I saw a big disparity between larger deals and smaller deals. In other words, as a firm, we represented clients wide spectrum. Some of them were doing $10 million and up, $20 million and up type of deals. And then you got more common deals, which were the $500,000, $1 million, $2 million, $3 million type of deals. And the difference in the professionals that were involved were significant. In the bigger deals, we always came across very seasoned and experienced M&A professionals, investment bankers, and it was just a different quality than when you were dealing with the smaller deals. You often ran into basically realtors lots of times that were trying to sell that $1 million or $2 million business. And there's just a different animal between selling a business and real estate. The realtors, they basically want to take a picture of the building and they want to throw up some data, square footage, et cetera. And they want to put a sign out front that it's for sale, and they want to tell the world it's for sale. And when you're doing a business, it's much more complex. There's a lot more ingredients involved. And as an attorney, I was aware of all those, where someone that's not experienced in that is not. So I thought that if I started Business Network of Ohio, I could bring that expertise and experience I had, not only as an attorney, but also what I had seen from the brokers that were the larger guys, and bring that quality down to the sweet spot that we have. And the sweet spot that we have is that deal that's somewhere between $500,000 and $10 million. The largest one we ever did was 20, like you said, but most of ours are somewhere between $500,000 to like $6 million.
What do you see the difference in the back end kind of documents involved with a small business versus a larger business? Is the small business pretty messy and you have to work a lot harder to kind of organize them to be able to sell? And generally a larger business has got some organization set up. What's kind of the difference between the bigger and smaller businesses?
The difference you see is typically the larger business will have better professionals. So therefore they have a better lawyer, they have a better CPA. So you'll find that their accounting is much more in order. All of their legal documents, et cetera, are in order. And that's the biggest difference you see. When you get into the smaller businesses, lots of times they're not doing monthly financials. They're only maybe doing a year-end push to the CPA to go ahead and push out a tax return. So therefore, you just don't have the quality of information that you have. And that's one of the things that we bring to the table. We try to get all that information up front so we know what we're dealing with. So when we package it in our presentation, or whatever you want to call it, a business summary or a confidential information memorandum, there's a lot of different words, prospectus. We're asking for all that information up front so we can see what we're dealing with and then present it in the best light that we can get it, as opposed to what you see sometimes with these brokers is they just put it up for sale. And then as the due diligence starts, as a buyer asks questions, it's sort of piecemeal and put together, and then you don't know what exactly you're getting.
Yeah. So So if any small business owner kind of listening to this, what, they have, let's say they have QuickBooks or something, and they're just doing like small little management through QuickBooks, managing their financials, and they're just doing tax returns, once a year or whatever. They're not really doing a huge amount of, or not putting a lot of effort into their financial side. What other tools or resources should they be doing along with it to help in the future when looking to sell their business?
Yeah, if we get engaged, if I get engaged in advance enough of when they want to sell, then we encourage them to, if they don't have a QuickBooks or some type of accounting system in place, we ask them to get that in place. We ask them to get into the routine of pushing that statement out each and every month, because eventually, once you find that buyer, the buyer is going to want to see that information. And then we always say, when you're selling a business, you're not only selling it to the buyer, but you're selling it to his professionals, which is going to be a CPA, it's going to be his lawyer, and most importantly in these deals is the banker. And the banker is going to want to see those monthly financials. So yes, we always encourage them to have a good accounting system and be pushing out monthly statements.
Yeah. And then let's say, for example, it's, I think there's a portion of the industry where people tend to be a little bit misleading in their financials and kind of the information on the back end. How often do you see that? And then how do you work with the business owner to make sure that they get everything set up correctly so that when the buyer comes in, can see everything, in the right perspective?
If I understand your question right, I mean, you see that more commonly in the smaller businesses. You see that more commonly in the family-run businesses and or the quote cash businesses, even though anymore there's getting to be less and less cash type of businesses. But I mean, you just got to tell them that, hey, if you're getting ready to sell your business, you can't have your cake and eat it too. You have to basically realize, if you don't want to report your income properly and you don't want to report your revenues and your profit and do your taxes properly, then you're going to get less at the sale price. You can't present it in one way to the IRS and then a different way to the buyer in the bank. But we tend to ourselves, if it's that type of situation, we're probably not going to get involved in that type of situation. So, I mean, we encourage them, hey, you're going to have to do it legitly, because a buyer is going to sense that. And the buyers, if they don't have faith in the numbers, and obviously if a bank doesn't have faith in the numbers, it's just, the deal's not going to happen.
So what other common mistakes do you see business owners make when looking to sell?
I would say the biggest mistake is, and again, going back to why I started this and as a lawyer, is that they didn't engage a really good broker. I mean, that's one of the main things. The broker knows how to go in there. And I always say the broker, if you have a good one, he pays for himself. I mean, because the broker will package all the information together. He knows how to go to market. He knows how to bring a pool of buyers together. And ultimately, he's going to get the best price for you. So therefore, he pays for himself. But lots of times you see business owners that will even attempt to try to do it by themselves, or they'll try to maybe have their lawyer or their accountant that's never done this before try to do it, or they engage somebody that isn't experienced. And that can be the biggest mistake, because, a business owner has poured his life efforts into this business and his capital into this thing. And this is his last bite at the apple. Yes, he's had a good income over the years, but this is the last bite. And you don't want to screw that up. You want to engage a good professional. When I say professional, not only to engage a broker that's going to guide this whole thing and structure this thing, but it's good to have a good qualified CPA, because there's going to be tax ramifications, and those are considerations in the deal, especially when you get up into the larger deals. And then also to have a good lawyer, because the lawyer is going to ultimately help with the letter of intent. It's going to help with the purchase agreement. You're usually going to have an asset purchase agreement and or a stock purchase agreement, and you're going to have a real estate purchase agreement, and you're going to have a whole bunch of other documents that go along with it. My team is all lawyers, so we try to help structure the deal and guide, but ultimately you're going to need a professional. So I say the biggest mistake people make is not having a good team of professionals, and the captain's got to be the broker.
Yeah,
that would be probably the number one mistake I see. The next mistake I would say is, again, in line with the professionals, is you got to value the business properly. You got to basically hire someone. Because of the fact that we've sold so many businesses, we can render like a broker's opinion. If it's a standard what I call, run of the mill type of business, something that's very common. There's a lot of them. It's not super unique or it's not super large. We can help with that. We do it from our past experience, and we have access to a whole bunch of reporting data, sales data that will tell you, hey, these type of businesses, whatever it is, selling across the country, gives you the, if they had X revenue, X profit, this was the price. So we can opine to that. But when we get into the more bigger complex, then we refer them to a CPA firm that has a business valuation guide. And then that business valuation guide sets the value. Because if you go to sell your business and your asking price is just way out of line, you're not going to have much success. And lots of times you're just spinning your wheels and you're wasting your time. And then along with that pricing, the other consideration you got to come in is, how do we structure that price? How are we going to pay for that price? And there's just certain businesses wherein you got to be creative. I mean, they're just not going to give you all the cash up front. There's going to be what we call an earnout, or maybe some seller financing where you're going to get paid down the road, whether that's set in the note or whether it's contingent upon future performance events. And there's reasons for that. I mean, for example, if you have a company that has $10 million in revenue, but $9 million of it all comes from one customer, you got a concentration issue. So therefore, whoever buys it isn't going to give you all the cash up in front, because if you lose that one customer, what do you got? So then you figure out an earnout type of arrangement. And those are the types of things. And it goes back to having the right professionals that will guide you.
Yeah, got it. Any other advice, or again, maybe one other mistake or anything you want to tell business owners about?
I would say another common mistake I say, and it's some advice, is I often see business owners hanging on to the business too long. And what I see happen is they get up in age and they want to keep getting another bite at the apple, another bite at the apple, another bite at the apple before they sell it. But what they do is they go on to what I call the coast. They're sort of coasting in the business. They're not reinvesting in the business. They're not trying to stay up on current events. They're not, if there's a capital requirement on some manufacturing machines that are needed, they don't get that because they know they're going to be selling. And then the next thing you know, the business has slipped. They've lost maybe some key employees, maybe they've lost some key customers. And then when they go to sell the business, it's nowhere near what it used to be, because they've taken their eye off the ball and they've sort of coasted, and they should have sold the business back when they were more involved and more committed to it. Yeah.
So if there's any business owner and they want to get in touch with you, John, so where's your, we mentioned you're in Ohio, and then Southeast
Michigan. Yeah.
So how's the best way they can reach you?
Yeah, the best way to reach me is just Google Business Network of Ohio. That would be the best way. And then, like you said, our footprint is basically Southeast Michigan. Like, we do a lot of up in the Detroit and Arbor area, and south of them down to Toledo, all the way down 75, Cincinnati. And then we go over a lot into Columbus and the Cleveland area.
Got it. Okay, cool. And then should I just call you, email you, visit your website, fill out a form?
Yeah. If they go to the website, that'll give us all the different ways to contact us. My shortest, quickest email address is just Naayers. That's my name, J, and then Naayers, Naayers @bex.net. That's my shortest one. But if you go on the website, it has our other longer email addresses, and then it will give you our phone number, etc.
Cool, awesome. Well, we thank you, John, for taking the day to give us some good advice about how to start your business, especially around the books and everything. That's probably the most important part of the whole process. We thank everyone that's been listening, and if you guys have any need any help with selling your business, you can reach out to John, or you can reach out to us, and we'll connect you with the local broker in your market. So thank you, John.
Okay, thank you, guys.